The economy is sending a lot of mixed signals right now. You have the stock market and crypto down and now back up. You have Walmart lowering prices to attract squeezed customers. And, you have a line out the door at Starbucks every morning. So what is hype and what's happening in the real economy?
Yeah, I'm telling you, it's confusing right now. I mean, I just watched a video this weekend about, how badly has Trump damaged the dollar. Right, like so that's a real concern. Now we have these countries that I don't think we can underestimate the safe haven of the U.S. dollar, right? And so we have that as well, and of course the tariffs. We need to mention those.
Oh, absolutely.
Right.
I think it's interesting, that we have these contradictory consumer behaviors. You have Walmart lowering prices, yet you have people, you and I went to two restaurants this weekend, Friday and Saturday night. We couldn't get reservations into either one. Days before, we had to call the people we knew to get us in. And, that's not a recessionary economy.
Sometimes I wonder if we're just in a little bit of a bubble, you know what I mean? Like Scottsdale I was just in Miami last week for a YPO conference. However, you take a look at what's going on in that South Beach, that area is down. Mm-hmm. So the real estate's down. There's lots of restaurants. I was eating with a bunch of locals, and they said that there's a lot of restaurants that have gone out of business. We are seeing what we're seeing here, but I think the consumer is getting whacked personally, and it certainly is showing up. There's a lot of kind of silent layoffs happening right now. And by the way, AI, this conference I was at was a marketing conference. And we had some really, really big people there, like Spotify, Athletic Greens, or AG. These are some of the best marketing people in the world. And we have lots and lots of agencies are moving away from content writing and things like that, and they're moving into ChatGPT and AI for a number of things.
Yeah, no, I would agree with you, but I still think consumer behavior, it's interesting because, we haven't been in a downturn in such a long time. People are very used to spending, right? So there's certain spending habits that people aren't necessarily changing.
Well, that article you sent me last week about the pay later stuff, that's very interesting. So you guys probably know there's Apple Pay and there's Apple Pay Later, and there's all these different kinds of programs out there like Flex. We use Flex for our rent, where the Flex will pay our rent, and then they'll go after the consumer for payments. Essentially, people are doing this with groceries, and hopefully this isn't new for information for a lot of you guys, but you start to see these things when people are starting to use Apple Pay Later for groceries and those kinds of things, and now they're starting to default. So I think, didn't you say 40% of the people on some of these programs are actually delinquent or late?
Well, yeah, in the past year, they've been delinquent or late. So that's it's at 41%, up from 32% last year. So
just look at the waterfall there, though, right? Because remember, 1, I guess, pay cash. 2, pay on a credit card. 3, finance a purchase over time, just kind of like a credit card. And when it starts to move down the line from, I guess, like a vehicle to food, it's a very, very different scenario, or rent. It's a very different scenario. I in my life have ever having all the real estate stuff that I've ever owned, I've never seen a program that finances a tenant.
Right.
And those are new. And so, and that's a direct result of the economy growing faster than wage growth.
Yeah, but I also think it's cultural too. I don't just think it's that. I think that it's people want what they want and they're going to buy it. And I think that they don't care if they have the money for it. And I don't think that it would matter if they made $20,000 more a year.
Consumer
I think
behavior.
They would just,
Credit card debt is at all-time high. That's true. And savings is at an all-time low.
You know what's funny? I was having this conversation last night with the guy sitting next to me at that dinner we were at. And, I was saying, Trump is trying to get really good jobs back into this economy. And he's trying to make it so that you make better wages and you can buy things like a home and you can save money and you can invest. But at the end of the day, in order to do that, the price of stuff has to go up. If we're going to make it in America, it's going to be much more expensive, right? And I was talking to him like, I don't know if people want that. Like, I don't know if, that people want, okay, you won't spend your money on frivolous things, and now you can make enough money to save and buy a house, but yet you can't go shop on Shein and all this stuff and buy a different outfit every week or buy, multiple like random things, right? And I just don't know if that's what people want in this culture. I just think people would rather buy stuff all day long and rent than buy a house. I mean,
well,
honestly.
I was thinking about like, I get the Made in America thing, and I get the reason for the tariffs and all that. I know it's super controversial. I get all that. I don't know how it's going to end up, but definitely I know some people just don't think it's going to be inflationary at all. I just don't see how it can't be. Like, but regardless of that, you start to look at these, called these international websites, right? Like Alibaba and Amazon. People were already buying stuff from out of the country. It's going to be very interesting to see how all this is going to play out. And also I saw this report about the amount of money that it spiked like crazy that the customs is getting now for stuff coming into the U.S. It jumped like crazy, like it's at an all-time high already just for the month of April, and so we're already seeing that kind of revenue hit, and it has to translate into higher priced consumer goods.
Absolutely, and I think the big word right now is uncertainty, right? Like, everything's uncertain, so everything is frozen. So like, we're not seeing much difference in the consumer purchasing from the tariffs, but you are seeing the fact that we could enter a recession. There's a possibility, even though the numbers aren't showing that yet.
We might be in one.
Yeah, I mean, we have to see what the GDP growth is after this next quarter. We totally could, but right now you're seeing the real estate market frozen in most markets. Like, nothing's moving because I think buyers are wondering, I don't want to buy right before the market tanks, right? But then sellers aren't necessarily lowering the prices because they're not forced to sell anything. And then you see the same thing in corporations, like no corporation's expanding right now. Everything's just kind of frozen. I
was talking to a commercial lender over the weekend, and we were emailing back and forth. And I chatted with him last week, and I said, why aren't we seeing more defaults? And what he told me was that the first kind of stage is working with the borrower and, what he called extended pretend, right? And that can go on for a while. He said, but that's now starting to be over. In fact, I'm going to call him today or tomorrow. And he said a lot of times they did all kinds of things to not have them into default, technical default. Well, the economy hasn't gotten that much better, right? Mm-hmm. And so his prediction is that you'll start to see some of these things emerge this year and next year as a result of okay, we've kind of had enough. It's time to go mark to market on some of these deals, and I think that's so. I think the first tranche is everybody's trying to figure it out. To your point, there's a lot of uncertainty, and I think I just want to address a couple things. I think that this dollar. The U.S. dollar is the world's currency, and it's at its weakest point right now. And so if you're China and I'm buying something from you, I'm paying you in U.S. dollars. And if the dollar is getting weaker, you're looking at me going, well, why would I take those? The dollar's getting weaker. And so why is this important? It's important because our trading partners historically have the dollar has been a bit of a safe haven. And so this is a big issue. And so why is it important? It's important because this is precisely why I think that we're starting to see a run on gold as an example. Because there's going to be a flight to there's going to be a flight out of dollars. Maybe not completely. Maybe it's a short time, but we're already seeing this. I looked at gold's like up over at 3,500 an ounce now, and it was like 2,500 not very long ago. Oh, there you are, Jerry. Thanks. Yeah, and what is that? Is that for a week or how long is that? 1 day? Go back to 6 months. Click on the 6 months up top there. And then, so there you go. Look at that, guys. So take a look at gold. Can everybody see that? Okay, great. So now I think this is a flight out of dollars. And to your point, Danille, what happens is when you start seeing other countries, concerned about the safe dollar, you're gonna see all kinds of fluctuations like this in other types of assets. So the question is will the dollar lose its reserve currency anytime soon? I don't think so personally. It takes a lot, and obviously is it the renminbi in China, I think, is the one that everybody kind of moves to, but there's just no possible way based on I don't think a lot of people really trust the government. They don't have the rule of law. There's a whole bunch of things around that. So people are frustrated right now, and there's uncertainty, and I don't know if we can ever pull that back. And this is an important thing because I think the U.S. has historically been a good trading partner, and I think that this is in jeopardy right now through all these kinds of things.
Yeah, absolutely. And I think the next, the next rock to fall will be, the decrease in staff, right? So I think that corporations right now, a lot of them are doing hiring freezes, but we're not seeing a ton of layoffs yet. But if things don't pick up, that's kind of going to be the next step.
Well, I think inflation too. There's already indications that inflation's going to be a bit of an issue.
Yeah, but you have companies like Walmart and Target coming out saying they're cutting prices on a bunch of their items. And Chipotle is coming out saying that they're not going to increase prices with the tariffs. So what that means is the corporations are going to be absorbing the cost. And if a corporation is going to be absorbing a cost, it's got to cut cost in other places. And I think those costs will come from staffing. Yeah,
they'll try to be all automated. I know the other day I can't remember where I was. I was flying through. I was on my way to Sedona, and I stopped because I got up early, and I pulled into a McDonald's, and I went in there just to get some hot coffee, and it was a kiosk. I was like, what? It was full kiosk, and then so I think you're going to start to see more and more and more of this, where that is one way that food service can certainly be automated. Not completely, of course, but it's a big one.
I want to look at the inflation trends too, because I think you have a dual dynamic there. So you're having, these larger companies are able to decrease prices because they have a hold on the market. So they're basically going to tell the company that they buy from, if you can't make it for X cost, then we're going to find a different company, right? So they're going to give them that discount. Really, the small business is going to take a big hit too on their pricing too. But these smaller companies, they're going to take a bigger hit because they can't absorb the cost. They don't have a big staff. So they're going to have to raise prices on the consumer. So I think you are going to see some things deflate and some things inflate.
And the other thing is I have a ton of friends in manufacturing, and if you guys haven't gone out and looked at this, you should. But the way the tariffs are going to roll out, it looks like, at least that's there's a lot of data around this. It's going to be they're going to put the countries into categories of green, yellow, and red. So just like a stoplight. So green means that they're friendly with us, right? Yellow is tentative, and red, of course, that would be like where China is, as an example. And so you're going to have different kind of measurements based on those. And so the reason why I'm bringing this up, if you just type this in, you'll find it. There's tons and tons and tons of information on this, including some really, really good YouTube videos on which countries are going to go into those buckets. And this is apparently at the moment how these tariffs are going to roll out. Now, what that means is the manufacturers, some of my friends, have already moved some of their stuff to like Vietnam, as an example, because they're in the green bucket. So if something's made in China, they might move it to Vietnam, as an example, because the tariff is going to be less there. So all this stuff is playing out right now too. So if you're a business owner and you're doing business somewhere and your consumer is the U.S., you're trying to figure out right now, where can I have this made for as little as possible? And of course, Trump's trying to make it in the U.S., but there's all kinds of workarounds on this stuff. There's all kinds of loopholes, if you will, in the way the manufacturers are doing this, even on the luxury goods, where they're being made in another country but being assembled, let's say in France or in Italy or wherever it might be, even in the U.S. I have a manufacturing friend that's actually doing that. It's actually, the parts are being made somewhere else, being shipped to the U.S., and then it's being assembled here, and then it's made in the U.S. So is it really? Do they put a made in the U.S. sticker on it, but really the components are all over the place. And so this is what's being unraveled right now.
I think something else that we can't ignore is the consumer behavior contradictions, right? So you have line out the door at Starbucks, but then you have airliners lowering their ticket prices because not as many people are traveling, right? And so you have to look at that. And I think what it comes down to is the widening class divide. So you kind of mentioned that being in Scottsdale, are we in a bubble? I don't think we're in a bubble, but I do think that you have a big gap between those that bought and owned pre-2021 and those that bought and owned after 2021 because
for real estate.
Or rented.
Yeah.
Yes, but not just for real estate, in general, because if somebody locked in a low mortgage rate, then the rest of this inflation they're more easily able to absorb because their house payment is so low. But if they're renting or they bought, recently and they have a really high house payment and they have all these inflated goods, they're much more squeezed.
Yeah, I think this is the time, guys, where you want to accumulate cash, in my opinion. You want to have reserves because we don't know, obviously, where all this is headed. And and to your point, Danille, not everyone is fiscally responsible. We've seen this before. I mean, if you just look at the stimmy checks that people got, they were gone within 2 years. That money, if you just look at the savings rate before the stimmy checks, after the stimmy checks, and you see how quickly it peaked and how quickly it went away. Now, I'm not saying that they didn't use them for things that they needed, obviously, because the economy was shut down too. However, but the savings rate is a very, very, the savings rate and the credit card delinquents and the credit card amount, which is well over $1 trillion now. Just past that, but not even a year ago, is out of control right now. And people are getting squeezed, but they're not changing their behaviors, and that's the issue.
Yeah, and Wally said, we have been in a recession. That said, we're approaching stagflation. I'm old, lived through the 70s. One thing to have cash to buy at a high price, another not to have a job or money to buy necessities. Yeah. So, that stagflation thing could be a real thing. I mean, that could really happen. I mean, people talk about inflation, they talk about deflation, but, if Powell doesn't lower rates and get the economy going, we could have stagflation.
It's possible. And, if we probably are going to see higher unemployment, and we're definitely going to see higher inflation, in my opinion. So, right, to your point.
Yeah.
And if those two things happen, then we could see a real rattling. I thought what was really interesting is the way Trump went after Powell this last week about lowering the interest rate. And, he basically, it's funny because he basically is looking for a way to get rid of him. Now, the interesting thing is Powell didn't back down. He just kept the rates where they were. Trump wants rates down.
Yeah, but Trump walked back the statements that he was going to fire Powell because that would have been horrible for the markets.
Oh, it would have been. But what's interesting is that Powell actually Trump gets to appoint his own person in May of 26. So yes. Powell's only there for, call it another year. Then he actually moves, I believe, into being a governor, right? So he'll still be on the board, but won't be in charge. But Trump's going to have his person in charge in a year.
That's a really good, point, because if Trump gets to pick his person and that person embraces inflation, because basically lowering rates is an embracement of inflation, it'll be interesting to see. It's a good place to be at if you're in real estate or if you're in, hard assets.
And one of the reasons why he wants rates down, in my opinion, is because if rates go down, things will start to get consumed again. It'll help GDP, and it'll mask what I think is going to be inflation that's coming from some of these tariffs and things that are in motion. There's a lag to all of this.
There's a lag. I think with the real estate markets and like the bond rates are, they can only do so. The Fed can only do so much for what the actual rates are, depending on, the 10 years. So
right. No, it's true, and I think that's the bond market is actually something else that's extremely interesting. Most people probably don't pay too much attention about, but the reality is that there is a potential, and this is back to that dollar issue that I brought up before, that if there's a flight from the bonds, it's going to be disruptive. It's actually gonna take a crack against the GDP, because a lot of our bonds are held by foreign interests, and so I know one of the if this is confusing, I'm with you guys. I'm trying to figure it out just like you. And what's really cool, Jerry, if you want to put up Limitless, guys, we are, I got Jim Rickards coming this year, guys. So we haven't really announced it yet. You guys are the first to know. He wrote a book called Currency Wars. He's written a bunch of books. I just read the most recent one that's about ChatGPT and money. And obviously we just raised the price for the Limitless Expo. It went up over the weekend. But because you guys are watching this live stream, we'll give you a last chance to lock in at the old price if you want. And you can save over $700 off the full ticket price. Just hit the code last chance when you check out. And I'll see you guys in Dallas in July. But I'm in the process of confirming Jim Rickards right now. He's agreed via text and email. And that's going to be huge because this is a guy that really understands what's going on. He wrote a book called Currency Wars, and I actually think this is where we're headed. Because if I'm a foreign country, the reality is do I want U.S. dollars to be paid in? I mean, that's a real concern.
Absolutely.
So we've got Jim coming this year. It's going to be super exciting.
So Wesley is stating 40% on buy now, pay later users have reported missing payments in the last year. And then also student loans are coming to a head as well. And a lot of these people that have the buy now, pay later probably also have student loan debt.
They could, yeah. That's another one. You're right. Yeah, mm-hmm. Trump's like, you guys owe, right?
Yeah.
So that was another one. I'm sure it pissed a lot of people off. But I tell you what, all of this stuff is kind of coming to a head. The interesting thing is those are the people that don't really have traction yet, right? Like a lot of these folks don't own assets,
right?
Sometimes those kinds of things can save you and help you at least, right? If you have something, if you're invested in hard assets and you have a lot of equity, at least you have that as a fallback. You don't really want to use it. Nobody wants to sell a home or an asset and scoop the equity to pay stuff. But there's a big difference between most students that have student debt coming out of college, maybe just trying to figure stuff out and getting whacked by inflation, the student debt, and of course these pay later things. And I actually think this is all going to get even worse with the AI and the ChatGPT and all that stuff. I'm telling you guys, the automation that's going on, like we have full plants today. You go in, there's no workers there. It's all robotic, right? All of it. So, it's already here, right? Certainly outside of the U.S., it's here. And so that's all coming. When you can build a whole factory to manufacture things and you don't really need a lot of people, we should be taking note of that.
Absolutely. And thank you guys for tuning in, and we will see you next week.
Thanks, guys.